Okay, we're going to make a start. So just a quick check to make sure people can hear me on the webinar.
Yes, we can hear you.
Oh, thank you. Okay. All right. Welcome everyone to Hannam & Partners' second annual Future Copper Giants seminar, backed by popular demand. I'm Roger Bell. I'm head of research at H&P. So over the next couple of hours, I'm delighted that we're going to be focusing on, some of the major copper projects that we believe are required to fill a looming deficit in copper supply over the next decade. Let's click on to the agenda for the day. Okay, so here's the agenda for the day. First up, I'm going to say a few words on how we see the copper space here at H&P. I'll try not to steal too much of Scott's thunder for his presentation later on. Then over the next hour or so, we're going to have Faraday, Los Andes, Solaris, and SolGold. We'll have a short coffee break. And then, as I said, we're going to have Scott Crooks from McKinsey give us their overview of the copper space. And then we're rounding off with Hot Chili, Aras, and finally Philo. And then at the end of the day, as I'm sure everyone will be getting thirsty by that point, we are going to host some drinks around the corner at the Jackalope, which is just very close by, for the benefit of the guys in the room. Just a quick word on the team here at H&P. Two new faces since last year on the research side. I'm delighted to welcome Jonathan Guy as a director. He's many of you will know him as a very experienced mining analyst. We've also got Oscar Norris, who's joined as an analyst and the brains of the operation. So just flicking on to set the scene really on copper. I think I said it was a metal on the brink this time last year. So as little did I know it was on the brink of falling $2,000. But we did see a nice kind of rebound in the latter half of 2022. It proved to be a bit of a false dawn, really. I think a lot of it was on the hope of China reopening. And we've seen the data points coming through since Chinese New Year have by and large been disappointing, and it's tailed off a little bit. That said, we're still at a very strong level, and you can see the inventory position is still at a kind of multi-year low. So I don't think it would take much of a rebound in demand for copper prices to begin to recover. And actually in the last week or so, with some of the most recent copper import data out of China looks like it's beginning to improve. So I mean that's the short-term picture, and really to the extent that we do have this short-term weakness, I think it's really likely to exacerbate long-term deficits as people sort of are uncertain about investing in new capacity, as we'll go on to talk about. I think what's driving the big deficit over the next decade, I've said it before, it's really energy transition, renewables, electric vehicles. I've picked out electric vehicles as a theme. We saw EV sales kind of doubling, and I'd say probably have moved up again since that level. And depending on what data point you look at, that entails sort of almost doubling in the intensity of use of copper in vehicles, or more than doubling. So essentially we see a structural improvement in demand over the next decade. We're in our modeling anyway looking at 3.6% CAGR versus historic just over 2% annual growth rates. IEA in fact have looked at this and said in a net zero emissions scenario, the cumulative copper requirement over the next 9 years is about 50 million tons. Sorry, rather 120 million tons just from EVs and renewables, and that would translate into a 50 million ton cumulative deficit. When you look at it on an annual basis, we're probably talking about half of global mined copper supply, which is just a staggering number. But even if we see some thrifting, which we believe we will, there's still a very large deficit that's coming. And part of the reason why this deficit is coming is really just that the industry has so far failed to invest in new capacity in any great way. You can see this is aggregate capex across the whole of the mining industry, or the listed space at least. I can see it's still, despite in recent years having some very healthy pricing, we can still see it's way behind where it was back in the early part of the last decade. And the right hand side chart here is quite important. Really, you can see it means that the industry as a whole is not investing enough to replenish its depreciating asset base. So and even with you'd expect this number to be well above 1 given the inflation we've been seeing in capital costs. And really going back to the what this really means for the deficits going forwards. As I said, if we do have this structural increase in demand, our sort of projections, I don't want to, I'm sure Scott will have his own projections, but our projections are that based on the visible supply or visible pipeline of projects, there's at least a 4 million ton deficit in sort of 8 to 10 years time. And that basically means that the projects that we're talking about today need to be built. But this is a chart that S&P produce every year, and it always amazes me, how little new copper is being discovered on an annual basis. And perhaps it's unsurprising given the budgets being where they are. But again, it's just another symptom of an industry that isn't, for whatever reason, whether it's historical reasons around capital discipline, it's just not been, investing in a pipeline of growth. So, what's next? I mean, I think we are at the beginning of a wave of M&A. We've started seeing some deals happening, mainly around, large producers buying smaller producers, and really that's not going to do anything for deficits. The deals for pre-production assets have been a bit thinner on the ground, as you can see on the left, but even there we're seeing a bit of a sort of gradual uptrend in what people are willing to pay per ton of resource. And if the line is cutting around sort of $100 a ton, that's above where many of these stocks trade at the moment. So if this wave comes, then I think we could definitely see upside. Well, clearly see upside from here. Chart on the right, again, it's another sort of it just demonstrates basically that this wave hasn't really started. We have had a few more deals in 2022, but nothing like what we saw in the early part of the last decade. So I'm going to hand over now to Paul from Faraday to start the company presentations.
Thanks, Roger.
I'll give you the mic.
Yeah, thanks, Roger. Good afternoon, everyone. Pleasure to be here to talk about Faraday Copper. So it's developing a US domestic source of copper. We've got one of the largest undeveloped copper resources in the US, 4.2 billion pounds in the measured and indicated category. We recently put out a PEA, which shows that even in high inflationary, high cost environment, we've got a robust project. It's really the start of the journey for Faraday. It's about providing an opportunity for valuation, and now it's about layering on the upside through both study optimization as well as adding value through the drill bit, where we've got significant exploration upside that we're already starting to demonstrate from drill holes that are not part of that PEA, and I'll show you in due course. We're well funded. We did a $40 million raise, which was pretty good in hindsight, considering the markets in February. That's sufficient now to see us through delivering on our milestones over the next 12 to 18 months. We're supported by three of the biggest names in the mining industry, in the Lundin family, Murray Edwards and Pierre Lassonde. The thing I find, or I'm excited about the uniqueness of this project, is that it's got a long life, over 30 years. It's got an open pit and an underground, and we see the potential for low initial capital, and then the open pit can actually fund the ongoing development of the underground. And so, compared to our peers, puts us in a unique situation in terms of that initial capital and then overall mine life. And then, I guess as everyone's probably going to say today, undervalued to our peers when you look at our resources and then the exploration upside as well. Where do we locate? We're right in the heart of the copper district in southern Arizona at the confluence of two main copper trends, an east-northeast trend that runs through the old San Manuel of BHPs. It's important to note there's still 800 million tons at 0.8% sitting underground that never got mined. And there's a further 700 million tons at between 0.12 and 0.2 sitting on old tailings as well. So potential for, consolidation in that part of Arizona. And then out to the Freeport district of Safford and Morenci. And then there's a northwest trend running up through Sarko's Ray and the Resolution project. Importantly, we're not in any residential footprint or major urban area. There are some challenges in Arizona, particularly around the Rosemont project, which has got retirement homes close by. And then Resolution has got native Indian title over the top. The pointer doesn't work, but we're in the San Pedro River Valley. Just an important point to make is, there's no agriculture in that river. Why not? Waters are naturally impaired, not of good enough quality for agriculture. So it's great for us because there's no aquifer protection. It's not an actively managed area for water. We also have no protected species or national forest in the area. This is a land holding, part of our financing. In February, we purchased a cattle ranch. It was for sale. So a few main benefits to that. We didn't want it going into the hands that somebody might be anti-mining. Being able to consolidate your land holding early in the development of a project is key because prices only go up. As a comparison, we spent $10 million to get 6,000 acres of private land. A couple of weeks ago, Ivanhoe Electric, who are 70 kilometers up the road, purchased 6,000 acres for $120 million. So, for us, a great deal. So, we've got a big control over surface land. These are the private land we acquired in that land purchase. Importantly, we've got a private land access across the San Pedro River, which is very rare. And it connects us up to the BHP private land over there. This is where our mineral claims are. Our open pit is predominantly on private patented land. We can then use this additional private land to place all of our infrastructure, removing it from any federal land. We do have some federal land here. Our underground resource lays below that, but it's all about limiting your disturbance on federal land. Also, as part of the deal on the ranch, we've signed an LOI with a solar power company. So Tucson Electric is wanting to increase the solar generation in the state. And the solar companies want access to the private land. And then, so they're currently doing a feasibility study on 110 to 150 megawatt solar farm. And that would look to provide 40 to 50% of the power for the operation. The other thing about obviously having private land is the potential for offset against any disturbance on federal land. Here's our resource, 500 million tons at, sort of call it 0.5% copper equivalent. Altogether, close to 5 billion pounds of copper, just over that in terms of the copper equivalent. So backed up by 200,000 meters of drilling, hence the high proportion in the measured and indicated. That was what de-risked the project for us when we came on board. However, historical work was more grade shell interpretation. So again, resources backed up by full geological model. We've done the geotechnical work and brought in all the metallurgical work. and the underground grade, as we're seeing, our bulk underground mine is fully diluted. So, you know, a great resource from which to work with and form the basis for the PEA. Graphically, here's some images of that. So the upper images are the open pit and the lower ones are the underground. We've got two styles of mineralization. So the open pit mineralization is associated with breccia pipes. The core of these breccia pipes is high grade, running 1% copper or more, and then they've got a lower grade envelope around them. In a number of cases, pits are limited on data, and you'll see from some of our recent drilling, we're confirming continuity of that high grade mineralization. Strip ratios are low, 1.2 to 1 over life of mine. And then the underground large footprint, which is amenable to block caving. We've done a full caveability assessment as part of the PEA, and it will confirm that it will cave without any preconditioning. Again, we've got these high grade cores in the underground, and that forms a basis for further upside about better delineation of those high grade cores. In terms of the PEA, as I say, you know, for me, particularly when you factor in, you know, it's this high inflationary environment, high costs, as Roger spoke about, you know, when I've had conversations with Newmont, with Barrick, and even the Lundins, you know, when they've factored in the cost escalations, they're seeing a lot of their big projects are underwater. So we've got a great base case in which to work from, you know, and we've really gone back to the beginning. We got all recent quotes. We used Asanko out of Tucson to lead the PEA. They'd most recently constructed and commissioned a plant in 2019, 30,000 ton per day, and they'd seen a 28% escalation to today's cost. So that's all factored into our capital costs. So as I said, one of the unique things for us was, you know, coming in at below $1 billion. So we're doing about 798 initial capital. So that's for the 30,000 ton per day mill and associated surface infrastructure. We're going with a dry stack. We believe that going forward, when you start thinking about permitting, that, you know, particularly in Arizona, you need to recycle the water. So, you know, dry stack is the way to go. And also it will limit your environmental footprint. So say we got, you know, 30-year mine life, starting off with the open pit, our $3.80 copper price, payback in year 4, and then ongoing cash flow will fund your underground development. And altogether, you know, producing in excess of 3 billion pounds of payable copper. Really good metallurgy. It's a sulfide-only project. There's a thin veneer of oxide, it's chalcopyrite and pyrite. There's no deleterious elements. There's no arsenic, nothing that will be penalty grade. And as you can see, 94%. And I'd say 95% of the revenue comes from copper. There's a small amount from moly and silver. Currently, there's no gold estimated in the resource. I'll talk about that shortly. You know, water's always the key thing. And, you know, we're certainly seeing a big change in the US. I'd say a 180-degree turn. You know, the regulators now, the federals have become fully staffed. We've got a lot of people been brought into permitting. And the engagement we've had is we're here to help you, to get you to permitting. We're not here to hinder. And working with the regulators, it's been about, for us now, building the framework for data collection. So we've installed flow meters in all of our drainages. With support from the feds, we've installed piezometers in the places that they wanted them, in the drill holes, to start collecting that data. We've cleaned out old wells, geochemistry, measuring water levels. You know, you need 2 years of water information that can be then submitted into your permitting through your EIA. And then interesting as well, we've started to get community engagement. The local communities around us were actually purpose-built towns by Magma Copper in the 50s for the old San Manuel mine. So since that mine closed in 2000, people have, you know, suffered economically. And so actually, you know, been very supportive of what we're doing. But what surprised me was we reached out to all the native Indian tribes in Arizona, which are 9 of them. And they said it's the first time any company's come to them at this stage of the investigation. Normally it's as they're starting development, and we've had site visits from them. So again, it's about building those relationships down the line as we move this project forward. In terms of exploration upside, you know, as an explorer myself, this is the exciting bit. Prior to us coming on board, there was no structural framework or understanding how this mineralization was controlled. So we've got that in place now. There's two key structures. There's called the Holy Joe Fault in the east. That's the main conduit that support or brings in the porphyries and the breccias, particularly around the main resource area. And then we've got a number of those targets up to the northwest as well as to the southeast that have never been drill tested. Again, it always amazes me as an explorer how people have this comfort zone and they always like to drill what they know. So 95% of all the historical drilling has been done in the resource area. And then we have the Western Fault, and that's the conduit to all the breccias and porphyries in the Western area that have not been drilled, tested at all yet. 400 breccias have been mapped on the project. There's 35 have had a drill hole or more, only 17 are in the resource. So we've got many more hundreds to start looking after. We've just flown a detailed airborne EM survey, and we're about to fly a spectral survey to provide us some more detailed data for the granularity of being able to target. I mentioned earlier about some of our pits are limited on data. We're just in the process of finishing off a 10,000 meter diamond drill program. None of that data is in the resource or in the PEA. No real rocket science, drill below the pit as a high grade breccia. We confirmed high grade intersections. What was a surprise was that we started to hit massive sulfide, massive chalcopyrite, and not unusual, but we see the Cananea deposit in Mexico. The Maria deposit has massive sulfide, and so does the Bor project in Serbia. So, but also what was encouraging, we started to see an enrichment in gold. And I said before that gold hadn't previously been estimated in the resource because they hadn't sampled for it. Now, we're not seeing that there's gold right across the system, but there's certain breccia phases that are enriched in gold, and it could account for 20 or 30 million tons within the open pit. So starting to factor in gold credits also adds significant value to the MPV going forward. So in terms of what are our next steps, this is over the next 12 to 18 months. So you can expect to see further drill results as we advance the project, in the next few weeks. We've got the gold byproduct work that we're doing. So we're quartering core and expect those drill results as we move through the summer. We're looking at asset scalability. Geotechnical work suggests that the block cave can cave at 45,000 ton a day. We've just gone through with a straight 30,000 ton per day base case at the moment, but optionality to increase throughput. Also, as well as coarsening the grind. So PEA has 190 microns. We've got test work that says we're still getting 94% recovery at 300 microns. So, that'd be great if we can coarsen the grind. And then we've got a 20,000 meter diamond drill program that will start in October after the monsoons. And really that's three aims. It's starting to further testing and expanding the open pit resource, looking at better defining those higher grades underground, and then starting to test new targets outside of that resource area. And with that, and as the reason we're all here, the scarcity of development-ready copper projects, we've got this large undeveloped mineral resource with significant exploration upside in the US. So thank you for your attention.
Great. Thanks very much, Paul. We've got a few minutes for Q&A in the room. So anyone got any questions for Faraday?
How will you get access to Keel? What do you foresee underground mining?
Yeah, block cave. So we're going to do a twin decline that's separate. So we're going to have a development study that's separate from the open pits. And so we'll be mining the open pits, and then in year 3, we commence the twin decline down. And so there's obviously the two footprints, Keel and American Eagle. And Keel's got a 10 to 15% greater grade than American Eagle, just due to the density of drilling. And that'll be the first cave to be initiated.
Thanks. Anyone else with questions? Okay, got one from
number of paths we can go down. One is we de-risk it technically, we package it all up and pass it on to a development company who's going to build this. Two, we make a significant new discovery from the exploration work we're doing. Or thirdly, and we've had some initial discussions with BHP, is about combining San Manuel with that 800 million tons at 0.8, and then one set of infrastructure, and then consolidating that area. And then you start looking at plus 100,000 tons of copper production annually.
Great. Any more questions? I guess just one last question for me. Obviously, being in the US seems to be becoming an advantage these days. What's the, do you see any sort of direct subsidies coming your way, or is it more about potential downstream customers wanting to
look,
make
I
sure it
met,
happens?
when I was at BMO in February, I met with Department of Energy and Department of Defense, you know, and they're almost tripping over themselves to give out money to mining companies. Now, copper's not on the critical metals list at the moment. Now, the latest I heard was that it's, if the US, 30% of the requirements in the US, if it's less than 30%, they're putting funding in. At the moment, copper, you know, Arizona produces 70% of US demand, so it's not on the list. But DOE and that said that money's coming. So we'll see. Watch this space.
Great. Thanks very much. So with that, we're going to move on to Los Andes and Eduardo Covarrubias.
Is this okay?
Yep.
Oh, okay, perfect. Thank you.
Well, thanks, Roger. Hello, everybody. Let's see if this.
Got the appendices.
Okay. I'll do the same for the next one, so I can't complain. Let's see where we get here. There you go. Great. Well, Los Andes Copper, we own the Vizcachitas project, and we, couple of things. Vizcachitas is a very large copper porphyry located in central Chile. We just put out our pre-feasibility study, and we announced our maiden reserves, 11 billion pounds of copper equivalent. In terms of resources, we have 15 billion pounds of measured and indicated, and another 15 billion pounds of inferred. And I'd like to mention these inferred because a good part of that is actually mineralization that's sitting below the grid of historical drilling that's short. So it's a matter of infill drilling and extending these subvertical developments and reclassifying into inferred and into measured and indicated. Our PFS shows that we have some pretty robust economics. We ran it at $368 per copper, which was the long-term consensus back in January. Today, I think this is around 373, so it's continued to move up. Even at 368, we were at 2.8 billion US after tax NPV, or a 24% IRR. Just as a reference, our leverage to copper price is substantial. Every 25 cents of increase in copper price, long-term copper price, is another $500 million US of after-tax NPV. We're looking in Chile. Chile is a prime mining jurisdiction. We've had several changes over the recent past. And if you follow the story in the country, we recently went through a constitutional process that was initially rejected, and now we're undergoing into a new constitutional process that's guided by Congress and led by a political or a distribution of political forces that makes it puts us in a very comfortable position of being able to see stability and development for the next several decades. We're in Tier 1 copper belt, and this is also very relevant. We're in the central Chile. This is, and I'll show this in a bit, a home to several or 3 or 4 of the world's largest copper mines. And it's also a belt that generates clean concentrates, very low arsenics. Ours is in that scenario. We own 100% of the deposit. We don't have strategic partners that have an equity stake or that have an offtake agreement that in some ways encumbers the concentrates or the commercial side of the production. Digging into the project itself a little bit more, because we're a greenfield project, we can design it from scratch. We don't need to deal with legacy issues or contingencies from the past. And we've adopted what we see as the sustainable mining practices going forward. And this is not just talking about a cliche. This is, we really incorporate, for example, we've gone, even though we have continental water rights, we've switched to desalinated water rights. We see that mining going forward, particularly in Chile, needs to go to desalinated water. We've joined the consortium where we will represent about 25% of the production of that consortium. The rest is going to be smaller existing operating mines and some high-end agricultural producers. And we're also requiring that consortium to make water available to some of the communities where the project's area of influence is located. Particularly relevant because we are in an area where the climate change has really caused hard desertification in some of these valleys. So they're really suffering the lack of water. We are in an area with plenty of infrastructure, and I'll show that in a bit as well. This is because we're in an area with several other mining operations already. Our initial life of mine is 26 years. Again, going back to what I just mentioned about these inferred resources, this is pretty low-hanging fruit by the time we can reclassify that. Our life of mine should go back to 40 years or more. Obviously, our PFS numbers are based just on the first 26 years, so that's what our numbers are. There's a production. We're going to be over 180,000 tons of copper produced for the first 8 years, and over life of mine over 150,000. This is completely open, so we've done some step-out drilling, and we can now say that we don't even know where the center of this deposit is located. Where the biggest challenge of opportunity is that we're trading at a bit over 10% of NAV, and this is where part of us spreading the word and getting the project to be known is what we're doing. There's a share capital. I'll skim quickly through this. 375 million market cap. We have a fairly contained shareholder base. Kermit Mining owns over 50% of the company, and then we have research capital funds as a very supportive shareholder over the years, and some other institutional investors as well. We recently completed a capital raise in January, and some warrants were exercised, so we're now sitting in a very comfortable cash position. Going back to the project, and just touch a second on our location. As I mentioned, on Central Belt, there's 3 or 4 of the world's largest copper mines. Pelambres, flagship operation of Antofagasta Minerals, 70 kilometers south, 70 kilometers, north, 70 kilometers south. You have Rio Blanco, the largest resource of Codelco, not the largest mine. Los Bronces, one of the 2 flagship operations of Anglo American, and Teniente further south, Codelco, the world's largest underground copper mine. Huge deposits. These are some of their numbers, as you can see. Obviously, our numbers are still much smaller, but we only have 60,000 meters of drilling. I mean, we had 200,000 to 300,000 meters of drilling in a completely open deposit. Our numbers would be substantially bigger. Completely surrounded by the majors. Just talking a bit about the project itself, because we're located in an area of several mining operations, we have access to plenty of infrastructure, and that's why our capex ends up being 2.4, and I'll touch on that in a minute, 2.4 billion and not 3.5 billion, because we don't need to build a lot of infrastructure. We just need to connect to it. First of all, again, we're low elevation, so we don't need to derate equipment. We don't need to do heavy winterizing of infrastructure. We don't need a camp. Those things, again, make big differences. We have near access to power lines. We have a designator that we joined because there's plenty of mining activity. There's a big mass of skilled labor force that can actually work and operate in the mine. Railway lines, ports available. Again, plenty of infrastructure. Touching a bit on the PFS economics, we're running a mill at 136,000 tons per day. And I guess I already mentioned our production. Part of what drives our economics is that we are able to produce or to mine at over 0.5% copper equivalent for the first 8 years. That really makes a big difference on the economics. And we have a cash cost of under $1 for the first 8 years, 125 for the life of mine. Our initial capex 2.4, and we have a quick payback period. Construction is about 300 years and a quarter, and we have a payback period of 2.5 years. That, in fact, is in some ways by design. We did some heavy investing in extensive access works to the mine. So by the time the mill is ready, the mine ramp up doesn't become a bottleneck. So that means there's quite a bit of money going into that sort of expedited ramp up. In terms of potential to grow, if you look at here, most of our mineralization, our current mineralization is located in the center of the valley, which is where historically has been all the drilling taking place. We have an unmineralized diatreme post-mineralization event that displaces the copper that actually it's located on our northeastern side, very similar to what the Teniente has with the Braden pipe. And what we were actually looking at is what happens on the southern side. So we drilled this hole and we ended up having the exact mineralization that we have on the other side at the same levels. I mean, this hole has, the last 300 meters is over 0.6% copper equivalent, and it ends up in very nice mineralization. So this is completely open. We have a similar effect on this side as well. And deep down, the bottom portion, we have a few holes over 1,000 meters. Some of these drill results are really encouraging to look at the upside potential for some underground down the road. And with this said, maybe I'll just stop here, not to invade on somebody else's time, and leave it open for questions.
Thanks very much, Eduardo. Any questions in the room?
Well, I was going to ask about the situation in Chile at the moment with the permitting. Obviously, you had some, I don't know, rabbits in the area or something.
Yes.
You know,
Cats that eat rabbits.
So for the
Yes.
for the people on the line, the questions around the permitting situation at Vizcachitas.
Yeah, no, I think that situation has actually been overturned. I mean, as you mentioned, there was an endangered species identified in the area, not even the project itself, and that caused some groups to go to the court and ask for the project to be stopped. And the court said, okay, let's stop it. Let's review, come back to us and tell us what's this all about. So we did go back to them. This happened March last year. We went back to the court in June, July last year with the reports and studies, and the court understood and agreed that there was no impact. As a context, this cat is present in most of the Andean. The Andean cat is present in most of the Andean, so it does coexist with several big operating mines and other activities. It hadn't been cited in our area, so that's why it hadn't been included in our information package. Now it's been included, and now we're actually in the last stretches of being able to get a permit to go back to them. But in the overall permitting process, we're now starting our environmental baseline for the, let's say, the big mine permit. So we're actually interviewing some of the tier 1 environmental consultants for what a mine permitting would require. So we're in that process right now and sort of doing the early work with the feasibility study as well. It'll probably take 2 to 3 years to get the information prepared. It also goes in hand with the feasibility study, and that's the sort of the process to be going. So.
Any other questions?
I wasn't quite sure. This is all open pits. The study currently is all open pit.
It's all open pit. Yes, it's all open pit, and because of the intercept we've identified below the pit, there's a pretty good potential developing a substantial underground mine that would combine with the later stages of the open pit.
Do you have some hydromet potential at the top?
Sorry?
You have hydromet leaching potential at the top?
Not really. We've looked at that over the years, but yeah, there's minimal oxide. It's more efficient just to run it through the mill, even if it has a lower recovery, than try to do something else.
So anyone else? Any questions? Okay, well, just one last question from me. Obviously, there's major companies in your area with sort of earlier stage projects, and what advantages could the development of Vizcachitas bring to them? Do you have any sort of views on that?
Yeah, so there's all the big boys are in the area. That's correct. Because of the scale, Vizcachitas in and of its own has enough scale to develop and tap to the existing infrastructure. But yes, for some of our neighbors, it would make a lot of sense to combine some of the divisions. And it's obviously something that's always present, and we get calls every once in a while.
That's great.
Yeah.
Okay. Thank you very much.
Thank you.
That's it. So I think we're going to move to the speakers on the webinar. Do we have Daniel on the line? Okay, so Daniel, we're just about to unmute you. So go ahead and give your presentation. Thanks. And tell us when you want us to move slides. Thank you.
Yeah, will do. Thanks for that, Roger. So my name, Daniel Earl, obviously President and CEO of Solaris Resources. It's very much a pleasure to be here speaking with you today. I'm going to try and run through the kind of key slides as I see them at the moment for Solaris, and I'll leave some room for questions, of course. But if we don't cover off a particular topic or you want to explore in more detail, just get in touch with us or Hannam, and we can make that connection and get into that. So Solaris Resources, this is a copper growth story. We're focused on our Warintza project in Ecuador. We describe this as being a world-class greenfield copper project. And so by that, we mean a project that combines global scale with truly robust economics. And our central resource, this is our first effort, came in at 1.5 billion tons, which is already above the threshold that any of the largest players in industry would be looking for a greenfield development. And you'll see in the presentation with the discoveries that we've made surrounding Central that we've still got multiple times growth potential to go. But the really special part of this asset is on the economics. And there's really two factors that I want you to think about here. The first is the high grade starter pit. And so this is the natural distribution of grade and high grade within our deposit towards the surface. And then the second thing, which is increasingly a focal point in industry, is around the cost intensity in Ecuador. If we could just back up to the capital structure, I'll start there. You can see our cash position. It's around $24 million. And for reference, we're spending about $2.5 million a month. So we're funded through the end of this year. There's lots of financing options available to us. We've never had constraints in terms of access to capital, but we're very mindful of dilution. And what I would say is that there's a number of potentially attractive non-dilutive options that are also available within the mix. There's nothing pressing here. This becomes more of a consideration as we get into Q4 and the end of the year. That's when these decisions will need to be made. One key point while we're on this slide is just on the ownership. We've undergone essentially a public reorganization of our share structure over the last year or so. And so it took us 12 months of hard graft to basically clear a massive overhang on our shares that was created by the parent company, and then also the warrants that we had deeply in the money. And so we cleared through nearly $200 million of excess distribution in the market over the last 12 months or so. And the last piece of that went through at the end of March in a block trade. And so as it stands today, we've got a completely clean share structure. There is no overhang from the parent company. They're entirely gone. And there are substantially no warrants remaining either. We could just skip to the next slide on Ecuador. I'll just put in a brief word here. This is a country that's entering into elections. The first round of voting will take place in August. The elections will be, our expectations is that it'll go to a runoff election in October, and that's when we'll have a government elect in Ecuador. Now, the most likely party to form the next government in the country would be the UNES party of Rafael Correa. So UNES had the largest seat share in the now dissolved National Assembly. They dominated the elections in February at the provincial and municipal level. And of course, this is the party that opened the mining sector in the first place with a series of reforms in 2014. They've maintained a strong pro-mining stance ever since, including recent statements reaffirming their support for the sector and ruling out any compromises or revisions to their position that would threaten the sector. Now, having said that, with UNES being the most likely party, what I would also say is that any of the other viable parties would also be perfectly acceptable to the mining sector. And so when you go down the line, any of the mainstream political parties that stand a chance of forming government, they're all supportive of the mining sector. So we're quite content with any of the potential candidates that could form government. And then at Solaris, you got to consider, much like our colleagues and friends at SolGold or any of the serious players in Ecuador, we've got an additional layer of protection built in. This comes in the form of an investment contract with the government. It freezes in place the regulatory framework for the project. And then the same thing on the fiscal side in terms of taxation to protect against exactly the kind of changes that can come in with a change in government in each of those areas that people are now kind of considering the potential for. And so we're locked in on both the regulatory and the fiscal side and very much protected for the life of this agreement, which runs out to 2041 and is renewable to 2066 beyond that. We could just turn to the next slide and just take a look at the district. This goes straight to the core of the kind of the low cost feature of this project that I was talking about as a key advantage and focal point for industry. And what you see here is essentially all the infrastructure that you could ask for a mining development. You've got a highway system that connects out to the Pacific ports. You've got a power grid which supplies nearly 90% low cost hydroelectric power, renewable power. You've got low cost labor that's half the cost of what it is in Chile. You've got a low elevation here. And then, of course, you've got freely available fresh water. And what you're competing against when you're talking about large-scale greenfield copper development is primarily the high Andes of Chile, okay, and also Peru. And this is really the opposite end of the spectrum in terms of capital intensity. And the proof of this is in the actual costs that you see from mining development in the sector. So set aside, feasibility study estimates. Look at the actual results in industry. Global scale mine 40 kilometers down the highway from us is one of the lowest cost mines in the world. This is Mirador. It was built to a global scale for $2.5 billion. Similar scale mine in Chile recently completed, Tech Resources QB2, was an $8 billion development with over $1.5 billion just for the water solution alone. And normalizing for scale, that's still a $5 billion difference between those two extremes of capital intensity. And to make up the difference at the deposit scale, you need to literally double the grade of our deposit to get the same economic results in Chile that we enjoy where we're located with all this infrastructure in Chile. And there's simply no project anywhere, whether in the portfolios of seniors or in the junior landscape, that can boast that kind of grade across the scale that we're speaking about here. With that, let me just turn to the resource. And again, this resource outline that you see here in red, this is from April of 2022. And that came in at 1.5 billion tons with about 250 million tons in the starter pit. Okay, and this again are primarily our central deposit. There were two obvious goals for the follow-on drilling program that we're now more than 12 months into. The first was to double the size of the starter pit, so that inventory that would form the first phase of a mining development where we've got better than 50% higher grades than the overall resource average. And you can see our progress on that front in the Northeast Extension area, where we've substantially completed the drilling we need to do to accomplish that goal. Okay, and then the second major goal was just to drill the adjacent deposit at East that we discovered late in that resource drilling program. And you can see the progress that we've made there. Now nearly 30 holes are drilling, into 30 holes into the East deposit. All of these holes up to the most recent one, hole 28, were into what is now clearly, well, let's call that the original discovery. And then with hole 28 that we put out on June 1st, we've actually discovered a second porphyry center within this East footprint. Okay, and we're calling this the Southeast Porphyry Center. So part of East, but a separate porphyry coming in there with substantially higher grades, significantly higher grades in this first drill hole. 300 meters at 0.65% starting from surface, and then the bottom 30 meters or so at 0.76% copper equivalent, entirely open at depth. We're going to come in with a deeper rig and test that potential. and then entirely open to the east and west, and then the southeast, where we've got additional drill holes coming in. So this will be a focus area. It has the potential to significantly improve the grade of this east target area as we're drilling it out. And we're at the very beginning of that discovery potential there in southeast. Okay, so that's one thing I want you to think about in terms of the new developments and how this could change the trajectory of this resource drill out. The second is our Patrimonio target. And we had a press release out in April where we discovered this zone through mapping and sampling work that we've done. We liked the quality of the mineralization that we saw at surface within what is a large footprint, 1.6 kilometers by 600 meters. But the quality of the mineralization, the strength of mineralization that we saw at surface was so encouraging. We put in 4 platforms for the initial effort at drill testing. The first of those is completed. We're drilling the very first hole into this target right now and waiting eagerly for the results there. That could again be a potential game changer in terms of the view of this cluster of porphyry deposits that we have here on the Warintza project. So stay tuned for that also. And then I'll just turn to the final slide and kind of wrap it up with this and looking at the share price performance relative to the peer group. And what you see is that you had tremendous underperformance while we were clearing through that overhang on our share structure, putting in the hard work over a period of more than 12 months to clean up and to affect that public reorganization that played out into the market with the excess selling, over $150 million together with the warrants just in the last period that we completed with the final block trade going through at the end of March. And basically since that point, or since it became clear that we would complete that, the stock has now been outperforming, and we've got something like a 30+% gap just to make up to where our peers have gone on this rebound in the copper market since the lows late last year. So about a 30% leg higher just to get back in line. And then obviously when you consider the growth profile that we're going to deliver on the base case, I'll have a resource update out by the end of the year. Again, we're targeting doubling of that starter pit, the drilling out of the east deposit to deliver major overall growth. And then we've got these potential wild cards in terms of delivering more high grade at southeast, and then potentially a new discovery at Patrimonio. And with those and a bit of luck, we hope to significantly outperform that peer group again. So I'll leave it there. I think I've left enough time for Q&A, so we'll turn to that if in fact I have.
Thanks very much, Daniel. Any questions in the room for Solaris? We've got one at the back.
Someone who got the story that well. In terms of the overhang in the market, what caused the parent to sell their shares? What created the overhang? A bit of history on that would be useful.
Yeah, absolutely. So the parent company, Equinox Gold, is an aspiring or emerging mid-tier gold producer. And they got themselves into a situation with a very aggressive growth profile where they were building 4 mines at once. One of those mines happened to be a +$1 billion mine in Ontario, was shared JV development with Orion. And essentially, if you think about, the gold price performance over the last year, the gold price corrected significantly before rebounding. But with that significant correction and some operational issues at their main producer in Mexico, they got themselves into a financial deficit relative to the funding requirements to deliver that growth profile. And so the Solaris position was a large position in a copper company. It's non-core to their mission, and it was a liquid asset that they were able ultimately to place into the market. And so they've got themselves into a better position financially, and then we've cleared through the overhang, and that's essentially, it's great news for our shareholders having gotten through that. Of course, it was difficult while we were working on that.
Thanks, Dan. Any follow-up questions in the room? Okay, just one final one from me. So I just wanted to ask, as part of the sort of genesis of Solaris, you did get a lot of other assets in the portfolio beyond Warintza, and you've talked in the past about spinning them off. Is there a time frame for that? What do you think the likely outcome of those other parts of the portfolio is?
Yeah, we have a tremendous portfolio here, and there's really 2 parts to this. We've got a development asset at La Verde, which is a relatively advanced asset, large, low-grade porphyry deposit with infrastructure. And then we've got the exploration portfolio. And the exploration portfolio, these are essentially David Lowell, the gentleman who discovered, our Warintza project, as well as the other major porphyries in our belt in Ecuador, and a whole host of other major copper and gold deposits in the Americas. These were his targets when he passed away for future discoveries, and so those are dear to us. And essentially, we want to hold on and preserve this value for our shareholders while we focus on Warintza. And so we've been advancing those quietly along the way. And when we have a transaction for Warintza, we'll also have a spin out for our shareholders that'll distribute 100% of the shares of a spin out company that hosts that portfolio. And so we're excited about that. We'll also include a portion of the claims that we have in Ecuador, which hosts the regional potential surrounding the kind of the core Warintza development. So that'll all be part of the package that gets spun out to our shareholders, and the timing will be when we've got a transaction for Warintza.
Excellent. Thank you very much, Daniel. That's very enlightening. And we're going to move on now to Scott Caldwell. Sorry, round of applause, Daniel. Moving on now. We're just about to unmute your line, Scott. Go ahead.
Should be unmuted.
Yep, go ahead. Thanks. We can hear you.
Good morning, good afternoon, everyone. Thanks for spending a few minutes with me. I'll briefly go through SolGold and give you a little update of where we are. So if you could move on to slide 2. Forward-looking statements here, but here we are on slide 3. So just a couple of things. Our market cap is right around 0.65 billion US. Got about 3 billion shares outstanding, cash, and this would have been at the end of the year. Well, end of March, excuse me, would be about 48 million in cash, and then included in that number, well, you can read it there, 36 million, about 26 million in shares that we own inside the parent company of SolGold that are sitting in, I'll say, treasury. We call them owned shares. Our structure, tightly held, as you can see, obviously Newcrest at 10.3 will soon be Newmont if that deal closes, and everybody's thinking it will. And then JCC Copper, they're new shareholders. They joined us in December. So tightly held company. You can see Nick Mather, DGR, 10 Star, and others. We control about 70% of the stock or 64% of the stock. So tightly held. Our main focus is our Cascabel project, which I'm sure most of you are familiar with. I'll spend a few minutes talking about that, but maybe we can move on to the next slide. And I'll talk about the strategic review. We have a strategic review that really began upon the closing of the Cornerstone transaction. So that's when we acquired or obtained 100% of the Cascabel project and a number of very interesting outside exploration tenements, primarily in the northern part of the country is what we're really interested in. But the strategic review, and it's led by our non-executive director, Dan, we're looking really at almost everything. We're looking at various financing alternatives, from concentrate takeouts to concentrate takeoffs to debt, etc. We're looking at a spin out of assets other than Cascabel, so that would be the outside exploration tenements we have 89 outside tenements in the country, from Peru, the Peruvian border, all the way north to Colombia. So some very attractive targets. And I'm sure Dan mentioned, I didn't get all of his presentation, but the cataster, or the right to obtain stake exploration properties, mineral exploration properties from the government, that is closed and has been for a number of years. So if you want to pick up a property, you're going to have to talk to someone who has exploration properties. The direct or indirect acquisition of an interest in the Cascabel project. So a partner to help us develop it, help us build it, and of course any other transaction or related transaction that makes sense to the board. And ultimately, if it's a material transaction, the shareholders would be asked to approve the transaction. We can move on to the next slide. So 2023 priorities, want to stress that we're continuing to de-risk the Cascabel project, more in-country on the ground. Previously, last year, we were doing a lot of engineering work, good firms. It wasn't that they weren't doing good work, but it was all being done offshore in the US and elsewhere, primarily the US. And so we decided to suspend that engineering work on the mill, essentially for the feasibility study, the DFS. We suspended that work, and we're starting to look at, is there a better way and a better place to do that work and a better way of looking at the project. So we suspended that work, and we're looking at where to do it. Obviously, Ecuador would be our preferred location, and obviously you'd have to bring in some expatriate experts, because SAG mills, things like that, aren't common things in Ecuador at this stage of the game. So what we're working on, and we're negotiating with the government the exploitation agreement and the investment protection agreement. And so that's moving well. We hope to have those signed before the end of the year. Right away land purchase for tails and the concentrate pipeline. We've signed some low-cost options on the tails, one of our tails sites. We have a number that we're investigating, and it gives us the right to purchase the land if indeed the geotechnical work that's due to begin this month is successful and proves that we can build a dam there. Concentrate pipeline, that's an old railway line, and that's where we put the pipeline down to the coast. The right-of-way on that is held by the Ecuadorian government. We're doing permitting work on our early works or our exploration declines. Those are the declines that access the deposit for the ultimate block cave. So there's a lot of work going on, and some met testing, looking at trying to improve gold recovery, whether that's a flow to pyrite con or what we decide to do there, but we're looking at trying to improve our gold recovery. And with the management and internal study, we call it the phase development approach. We're looking at, is there a low capital cost, reduced timeline to production, mining the higher grade core of the Apala deposit with a block cave. And so a smaller footprint, et cetera, a smaller mill, seeing if we can't come up with a phased approach, start small and gradually expand to the 25 million tons per annum that's in the current PFS. So we're working on that internally. We'll present that work to the board when it's finished. If the board likes it, then we would begin work with outside consultants so that we could have a public document that we could speak to. Trying to get that all completed before the end of the year. We'll see how that goes. It's really going to be availability of the various technical consultants. Most of the underlying work, such as met testing, the resource model, geotechnical work related to the cave, hydrology with the rainfall and the water models for the inflows of water into the cave. That sort of work is sound and solid. It's really just how do you want to go about developing the project. So we're busy in the field and advancing it, making good progress on what we think is really just de-risking the project. And we'll begin working on the mill design when appropriate and finalize that. I spoke briefly about our outside exploration or regional exploration, as we call it. We've got 90 tenements. That includes the Cascabel tenement, so 89 outside. We've re-ranked them upon closure of the merger with Cornerstone. A number of the Cornerstone properties are now in our top 10. And obviously, we're focusing on doing the work on that top 10. We are not drilling at present anywhere in the country. We're evaluating where to drill, get the appropriate permits, and then we'll evaluate when to begin drilling again. So the total land package is huge at 358,000 hectares. Next slide, please. So SolGold, Cascabel is a very large deposit. The current PFS extracts about 21% of the M&I resource, and it has a 26-year life at 25 million tons a year. So you can kind of do the arithmetic, but this thing has the potential to have a 100-year mine life. So it's very, very large, and so it's got a lot of copper, a lot of contained gold. The metallurgy is very clean. All the met testing to date, there's no arsenic in the rock, so there's no arsenic that reports to the con. Any other of the type of mineralization you don't want to see in a con, but it's very, very clean. I invested in this company in 2016, and I own right around 19.7 million shares. But I visited site with some colleagues and spent 2 or 3 days just looking at core. And frankly, I worked at Grasberg, and the core reminds me of some of the Grasberg drill holes where you've got chalcopyrite as your primary mineralization with a sprinkling of bornite. So it's going to make a very nice con. And a very desirable con because of how clean it is. Next slide, please. So the phased approach that I talked about briefly, again, it's a work in progress. We can't really talk about it until it's done and the board's approved it, and then we get outside consultants to review it and take it from there. But again, the underlying fundamentals, the resource model, the metallurgy, the geotechnical work, the hydrology, that's all solid and sound and would apply to this phased approach. We would just simply start with a smaller cave and eventually expand to a larger cave over time. But some of the advantages, obviously, we're quite confident that we would have. You build a much smaller mill, you're going to have a lower capital cost. You have a smaller initial development on your cave for the footprint, and then slowly expand that footprint as you cave over time. You'll have a lower mining capital cost, and the timeline will be reduced. If you looked at our current PFS pre-feasibility study, critical path is the underground development. It's not only accessing the bottom of the deposit, which is about 2.5 kilometers of decline. It's also all of the extensive infrastructure and underground development for that big cave, the undercut. And so we're quite confident in how this is going to look. But again, we haven't finished the work. And as soon as we can talk to it publicly, we will, if the board approves it and we get that 43-101 type work done. But as we work through this, what is the optimum production profile? I can guarantee you our study will not be optimum. We're trying to get an indication of how to proceed with this, not necessarily the optimum throughput rate, et cetera. We'll refine that as time goes by. Tailing sites, I told you about the option we've secured, but we've got 2 or 3. We've got a number of other sites, some of them on our Cascabel tenement, that they won't hold, billions of tons, but they'll hold 100 million, 200 million tons. So we see a real opportunity to start there and eventually expand to some of these larger tail sites that are not on our tenement. So there's a lot of work going on that side. Again, we'll present it to our board shortly, and then if they approve it, we'll move on to the outside experts to help us get this into a 43-101 format. Next slide, please. So Cascabel, I won't belabor this a lot. It's approximately 40 kilometers south of the Colombian border. The concentrate pipeline or railway line is that thin black line that heads to San Lorenzo port. The better of the 2 ports, deep water port, is Esmeraldas. If you looked at our pre-feasibility study, you would see the concentrate line going to Esmeraldas. We'll evaluate, could we use the San Lorenzo port, but the bulk of the concentrate pipeline would be down that black old railway bed. And so Cascabel, near hydroelectric power line, you can see the line about 50 kilometers away. So there's a lot of infrastructure there. It's about a 4-hour drive, depending on traffic, from Quito on a paved highway to the tenement. Again, deep water port, hydroelectric power nearby. We're in discussions with talking about some takeoffs on the power type stuff. We have not signed any sort of takeoff agreement on the power side. But anyway, it's got some very good infrastructure, and it's easy to get to, again, on a paved highway most of the way. So next slide, please. So the exploration strategy, again, I mentioned prioritizing the targets, and just an example, the box is the far north end, and you can see Cascabel in the red, and the blue, the light blue, the baby blue, those would have been properties that actually were in cornerstone portfolio. And so they've moved into our high priority. So our focus, if you want to look at where we're working today, is primarily in the north. We are also working in some other properties, but this is where our focus is. Again, no drilling. We're evaluating, identifying drill targets with mapping, chip samples, that sort of work, soils, trying to determine where to drill. So those are our highest priority targets would be in the north right now. I'm referring again to the outside exploration. Cascabel has a number of additional porphyries. TAM, that's an open pit resource that is not in the PFS study at this stage of the game. It's lower grade material, but it outcrops to surface. Will that fit our development program? We need to just sort of evaluate how it fits, what sort of cash it generates. I mentioned the mining cadastre is closed. So anybody that has exploration properties outside of their core assets, such as ourselves, you know, it really is a valuable asset. And so we're working on it. We're not spending a lot of money on the outside exploration tenements. Our focus is Cascabel and de-risking that project. At any rate, we've got a great team. You know, we've been very successful. Found one or two, I'll say three porphyries, Porvenir being the third, two at Cascabel on Apala and Tam, and then the third is Porvenir in the south of the country. So we found those porphyry copper deposits, and so we'll continue to use our model to evaluate and see if we can't find another. Again, no drilling, focus is Cascabel. Next slide, please. So Ecuador, and Dan touched on this briefly, but at the bottom you can see the companies that we're aware of that are active here, including Franco and Cisco, a couple of our partners on the, both of them hold a royalty on the Apollo project, Cascabel project. Newcrest, of course, a shareholder, soon to be replaced by Newmont if that transaction closes, which I think we all anticipate. But you can see there's a growing population of mining companies that are involved in Ecuador. Why? I guess it's because really I don't guess, I know it's the rocks, right? This is where you're going to find that next truly great deposit, Fruta del Norte being one, Mirador being an example of projects that were permitted, built, and are now successful in working in Ecuador. So we're excited about Ecuador. We've got a good relationship with the current administration. We've had a good relationship with previous administrations and anticipate that to continue. I now live in Ecuador, so I spend probably 90% of my time in country, which is working out quite well. And as I've mentioned previously on several occasions, it's kind of taking a page out of Lundin Mining's book. Ron moved down here and was very, very successful in constructing and getting that mine up and running. Next slide, I think this is it. So tier one asset, and with that, I'll open it up to questions if I have any time. Looks like I ran over.
We'll just have one question, I guess. I'll take the lead on that. I think you had Newcrest on the previous slide, and obviously they're on your register, but they are in the process of merging with Newmont. Where do you think Ecuador rank in a sort of merged Newmont-Newcrest entity in terms of their strategic opportunity?
I have not, we have not spoken, we being SolGold, have not spoken with Newmont. We intend to give them a call to speak with them once things settle down a little more with the Newcrest. I do know that the president of Newmont was interviewed and he spoke about Ecuador. I do know that he mentioned that non-core assets were some of the things they were looking at disposing of. What I would encourage Newmont to do is really take a look at the data, and I'm sure they will, but take a look at Cascabel before they make a decision on what to do. But I do not know what they're going to do with that block of stock. But we haven't spoken to them, so we'll just have to, right now, it'll be wait and see.
Great, thank you very much, Scott. Yeah, that was excellent. We'll take a break now for the guys in the room, but yeah, back in about 10 minutes. Thank you very much. Echoing, is that because?
Hi, good afternoon. Who's Hot Chili? Hot Chili is a copper developer in Chile, okay? We have 3.5 million tons of fine copper contained, most of them indicated. Basically 3 million ounces of gold today in a resource of 1 billion tons at basically 0.5% copper equivalent, okay? It's a little bit less, we can call it 0.48. We're in Chile. Chile is a mining jurisdiction. Chile has been to trouble recently. Yes, it has. But we have overcome it with democracy, with institutions. 63% of the population rejected a proposal from the left to give us a new constitution. 63% of the population just voted for the right wing of my country to draft the new constitution with a mandatory vote. Things happened, sure. We had riots in London. The capital was stormed a few years ago, and we also had problems, social problems, but we are overcoming those problems with democracy. Chile is a stable jurisdiction. 10% of our product, internal product, is mining. Of course, that depends on the copper price, could go way higher. Our industry is copper. Every Chilean knows that that's our major product. All of you who are here are probably enthusiastic about copper, so I'm not going to go into why copper is so important. We are about to issue a PEA. We are going to deliver a PEA. Unfortunately, I cannot give you the numbers now. It's not released, but in the next couple of weeks, we will be issuing a PEA. We are talking on the order of magnitude, circa 100,000 tons of fine copper. That's what we want. We're moving to, as soon as we release the PEA, we will be moving to PFS and then DFS. We want to construct the mine. And what I'm going to tell you in this presentation is that why we have low risk of construction. Analyst coverage, of course, Hannam Partners in London, Cormac in Canada. We're double listed. We list in Sydney and in Toronto. EA Capital is also in Canada, and Veritas in Sydney. 85% of our capital base is Australian. 10% roughly, 15% is it's from abroad. Major shareholders, Glencore, Sprott. If you put all the Sprott group or all the guys, although they are separate, they roughly also control basically 10%. The regional group, Bluespec Australian, basically 6%, and other capital of investment funds. 120 million shares. That's a little bit updated. We've got a little less cash at the moment. We consider ourselves to be extremely undervalued, of course, as any single company here would. What's the risk of a developer? In my mind, we have two big risks. One, it's copper price. Mackenzie just said it, and that's the biggest risk, right? Copper price, it's fundamental, not much we can do about that. The second risk for a developer is mine construction, what it takes you to actually produce the first gram of copper, right? We started in 2009. I joined the company in 2009. We listed 2010. 2016, we released our first PFS of Productora. Unfortunately, at the time when we released the PFS, the market was crumbling. In 2016, in February, the copper pound got to less than $2. So it was the wrong time to submit, to release a PFS. We know that now, but at the time, we were just working towards getting it. Unfortunately, when we got there, we realized we didn't have enough mine life. We had half the project we wanted to. It wasn't economical. 250 million tons. We saw the opportunity because we saw targets close to us. Those targets were already explored. We were not going to greenfield exploration. We knew those deposits. We knew they were not in the public, and we tried to get them, which we did. Basically, in 2019, we also got some small high-grade projects. But the big stake here was Cortadera, okay? We got in 2019. We start drilling right away. To make a long story short, today we have 750 million tons in Cortadera. So we went from 250 million tons to 1 billion, same grade. Of course, this allowed us to complete mine life and to have an economical project. The economics are looking good. What we did in all this time, where we have scarce resources, we work on the permitting, we work on de-risking. I am myself a lawyer, so I know about regulation. We told our board at the moment, we need to advance, we need to start with the de-risking. What's the main de-risking in our country? Water, first of all. We got the maritime concession. We don't have to sign LOIs, we don't have to deal with water. We have our own water system. A maritime concession that took 8 years to get us the maritime concession. But now we can sell water to whoever we want. We got all the easements all the way to the coast. We got electrical connection to the central grid. I've been talking to the majors of the area for 10 years. We support the 3 local communities. We control the surface rights. And we are very close to a 50,000 population city where we can put everyone there, right? We won't, though. We won't, because we are also going to put people in Freirina and in Huasco. Why? Because we've been dealing with these boroughs. We know what they need. They need money. They need people there. They need an injection of funds. And that's why we decided, actually, at the moment, we're talking with the major. We're putting 200 people when we start construction. And in Huasco, we're finding a solution with the truck drivers. Sorry. Port, it's 50 kilometers away, and it's owned by our partners. CAP, the major iron ore producer of Chile, it's a shareholder of us. You cannot have better infrastructure than this. This is 800 meters. When you talk about Chile, usually you say, okay, 3,400 meters high. This is 800. The highest it gets is 856, right? It's very low. Both projects are connected through a conveyor belt. Doppelmayr is doing that, Austrians. Those are the nature of the deposit. We have a block cave entering at the late stage. This is in year 11, basically. The rest is open pit, but this, of course, it will depend on copper price. If copper price is high, I'm sure there's going to be a big hole right there instead of a block cave, right? Deal that we just did with AMSAN, Tapata Minerals. We are exploring their area, actually. We're drilling at the moment. We don't believe this is going to be a huge increase. We believe it's going to be an increase, maybe 80 million, 50 million tons. We don't know yet. We've got to assess the whole thing. But it's going to increase a little bit the body, okay? The last thing I'm going to tell you, because I think I ran out of time, is that it's the potential, because we know already what we have. This project was at PFS level. We are joining the whole thing together from PE, from the economical study. We're then going to go into pre-feasibility right away. What we know is that it's better to get new projects that have been explored. And we know that there are many in the area. We're getting those, we're negotiating those projects, and we're gonna drill them and put them into a central processing facility. That's stage 2. The stage 1 is the PA you're about to see. And with that, we're going to take it to construction. So basically what I'm saying, or my last message on Hot Chili is that we want to take this to construction and soon, very soon, and we have all the regulatory issues to do it. So that's it. Thank you very much. Yours. Yours and yours.
We've got time for Q&A if you want.
Yeah,
to.
of course, of course.
So any questions for Jose Ignacio from the room? Got one over here.
Hi, thanks. So Glencore is obviously an important partner with you, shareholder, off-taker. Can you just talk a bit more about that relationship and how much of the offtake have they been taking?
Glencore owns basically 9% of us at the moment. They have an offtake agreement for 60% of our metal for the first 8 years, okay? Only for the first 8 years. They cannot dilute below 7.5 because they lose the offtake. They've been very good partners, very technical. They give us a lot of technical support. And basically, they work as a peer review and everything we do. So we have a good relation. We like Glencore where it is. We hope to continue.
Any further questions in the room? All right, now I think you touched on the relationship with CAP. Could you just you describe that in a bit more detail?
Yes, CAP, it's a shareholders of us. They have it then. It's a little bit tricky. CAP owns 20% through a subsidiary of Productora, but they are also at the holding level. And at the moment, of course, we are in discussions of rationalizing their position. That's an ongoing thing, right? They are part of the project. We are together. They have their iron ore mines everywhere, and they have the port. So it's a very constructive relation for sure.
Great, thanks. Okay, I think we'll leave it there and move on to the next presentation. But yeah, thank you very much again, Jose Ignacio. So next up, we've got Darren from Aras Minerals. Just try and click through the appendices.
Very good, thanks. Thanks, Roger. So my name is Darren Klink, President and Director of Aras Minerals, and I'm the guy that's going to break up all this great stuff that's been discussed in South America, because I'm going to take you to Kazakhstan. We're 100% focused in Kazakhstan. We're relatively a new company. In fact, we've only been public for about 12 months or so. 100% focused on copper in the northeastern part of Kazakhstan. As you can see, it's fairly flat, wide open, and we think is really on the verge of huge opportunities in what the locals are referring to, of course, as well as the new Kazakhstan. Obligatory cautionary notes. Just a little bit about the team. So this company really has been on the ground for the last 18 months or so. It was private and then it's gone public. Tim Barry and I kind of co-manage this. Tim's moved his whole family over to Kazakhstan about 12 months ago as a geologist. I'm based in Vancouver. We've got a really strong technical group in terms of advisors. Dr. Hart, Craig Harcutt out of Vancouver, the MDRU, John Mark Stouty. These are porphyry specialists that have worked around the world. And on the board as well, Christian Malau, former CEO of Equinox Gold. Dan Coons has experience over in this part of the world. He was the president of Ivanhoe when they made the discovery at Oyu Tolgoi, and also had some experience in Kazakhstan with Ivanhoe. And Vera Kobalia on our board, former deputy chair of the Astana Expo, so she actually has worked in Kazakhstan. And also former minister and advisor to the president of the Republic of Georgia, but is based in Vancouver. So for us, relatively small company, as I said, $25 million market cap. Teck Resources did take a 9.9% interest in the company in November of last year. And actually, I just arrived last night here into London. Teck was over in the country with us, with their whole team, having a bit of a look at this new country. You can see market cap 25 million, cash in the bank is about $3 million. I'll talk a little bit about where that gets us, because in fact, one of the things that I'm going to talk about is the Kazakhstan cost advantage. Things go a lot longer there in terms of drill costs, petrol costs, etc. Oscar saw it. He was over last week in Kazakhstan. And so definitely things last a lot longer in terms of your treasury as well. So for us, this is a stable mining friendly jurisdiction that has really changed a lot in the last 5 years. In fact, I was told last year, if you haven't been to Kazakhstan in the last 5 years, you haven't been to Kazakhstan. This is how much is changing underneath President Tokayev with really dramatic reforms, fiscal, economic, and governance. And we were able to get in kind of right in the middle of COVID on the back of the change of the Mining Act to reflect what is Western Australian Mining Code. So a mining code that many of us are very comfortable with and respect. We've got into a porphyry belt where we acquired a project or an option to purchase a project that we think has the scale to get to 1 billion tons. And then have used that really as a formation point to build out a land package. And so we've now been able to acquire 3,300 square kilometers on this belt. I'm going to talk a little bit about it. It's the third largest tenement holder in the country behind Rio Tinto and Fortescue. And I can say it's getting more and more busier over there over the last 6 months with the majors starting to show up. I'm going to talk a little bit about Kazakhstan because for some in the room, perhaps you might be not that familiar with it. Definitely a better understanding here in Europe than back where I'm based in Vancouver. We even have our national newspapers mixing up countries that start with K in that part of the world. But it's a big country. It doesn't have a big landmass. Sorry, a big population, 18 million people in the ninth largest country in the world, heavily endowed with resources, as we know. Our project is about 300 kilometers away from the capital city on a 4-lane paved highway. President Tokayev, they held elections last year. Part of his reforms as well was that he put in a constitutional reform where the president can only be elected for a 7-year term. Big changes from President Nazarbayev, who ruled the country for 28 years. And so this is part and parcel with, I think, why the West is really showing up with both boots on. More than about 60% of the foreign direct investment into the country every year comes from North America or Europe. It has investment grade debt. And as you can see, the capital city here looks like Dubai, in fact. So it's a lot of investment that's come in here. Overall, I mean, the World Bank ranks it equal with Canada and Ireland in terms of an ease of doing business. So they've done a lot over the last 5 years to remove the bureaucracy to get in and set up a business. This has nothing to do with mining. This is the same as if you're going to set up a popsicle stand. It's just as easy in Kazakhstan as it is in Canada. And when you look at GDP per capita, right in the scheme of things there with Chile and Turkey. So larger economies that we're perhaps more well aware of. Similar GDP per capita, but you'll see when you look at the neighboring countries, 5 to 7 times the GDP per capita than many of its neighbors. So it truly is to have country in Central Asia. I think a key thing for us was when they modernized the mining code and effectively have copied Western Australian mining law in late 2018. There is some elements of both Ontario and Quebec in this new mining law as well. But then, of course, COVID happened. And it was difficult to get into. In fact, when I first visited 2 years ago, it took 5 or 6 weeks to get stamps and Kazakh and Russian, documentation. And today with an OECD passport, you just show up visa free. So they've really opened it up, since COVID. And we were fortunate to be able to get in and get a deal on a significant asset and then use that as a leverage point to build out our land package. Competitive fiscal terms. And I talked about the Kazakhstan cost advantage. I don't know anywhere else in the world that you can drill core for $100 a meter. The petrol price at the pumps yesterday when I was there is about 50 cents a liter. And what that means then is that mining costs are just over $1 a ton. I visited a 30 million ton per annum, actually 60 million tons because it's a 1-to-1 strip. The Boshkul copper mine and their mining costs are $1.10 a ton. I don't know anywhere else in the world that is the case. Power is cheap at 2.5 cents a kilowatt hour and a very highly skilled workforce. We have 90% of our workforce is Kazakh. Most of our geologists, they all speak Kazakh, Russian, and English, and super smart. The overall population, 100% literacy, very entrepreneurial. It is really going places. And the other thing as well that many of us probably aren't aware of is that not in terms of endowment, but in terms of production, it's top 10 in the world in terms of many things that we use in our everyday lives, including when you look at copper, it's 5th in the world in refined copper. So there's also quite a bit of smelting capacity in the country. So yes, behind China, Chile, Japan, and the Congo, Kazakhstan is the largest exporter of refined copper in the world. So who's there? If you build it, they will come. So this is just a snapshot that looks at some of the countries, companies that are here. Many of these you would recognize, Glencore, I think 2 years ago, about 20% of their EBITDA came out of this country. Barrick, last month, in fact, one of their senior vice presidents commented that Kazakhstan is a large country with enormous potential in mining and metallurgy. We plan to register a company in Kazakhstan soon and start exploring deposits. Chevron put $45 billion into this country 2 years ago as an expansion. And I believe it's their most important asset worldwide. So Fortescue, Rio Tinto has been here for 6 years now, advancing a copper project in the middle of the Balkhash region. And we're up in the northeastern part of the country, focused in that belt. Talking about infrastructure, the Muskoka project, which I've got some stats on here momentarily, but we're rich in infrastructure. I know we've talked a lot about it, but the 5th largest coal mine in the world is literally out the back door of the town that we're based in there, Ekibastuz, which is about 3 hours down that highway, 4-lane paved highway to get there. I understand the highest voltage power lines in the world run right over top of the deposit. It's 1100 kV. And so about 40% of Kazakhstan's energy comes out of this area. So much so, in fact, I think Oscar's fillings were sizzling when we were underneath the deposit there last week. And then you've got heavy rail that's integrated all through this part of the country as well, of course, moving coal around as well. So the Muskoka resource right now, as it sits, this was what we put out as part of our 43-101 last year when we went public. It's a couple 100 million tons, 0.3% copper and a 0.5 gram gold. So call it, 0.7% equivalent. But this is really just the first leg to the stool. We think that we can make this bigger. And in fact, we've drilled another 20,000 meters of drilling here over the last 18 months. And I apologize, I see it hasn't come through very clearly in terms of the results, but you can see on the right-hand side, big intervals through the middle part of this deposit, 800, 900 meters of 0.4, 0.6, 0.8% copper equivalent. One of the first things we did is actually we deepened the holes. Most of the drilling here historically, which took place between 2008 and 2013, was only kind of 600-meter holes, and so we went deeper. And you can see that we're actually bottoming out, and actually still the deposit is open at depth. Again, apologies, and I sent this from Kazakhstan. It didn't come through that great here this week. But the other thing I wanted to point out is that there's definitely some higher grade, this higher grade core. So you're seeing relatively good intervals, 260 meters of a percent copper equivalent. But within that, 64 meters of 2.2%, 2.6% copper equivalent, 168 meters of 2% copper equivalent from a hole that we put out in the middle part of last year. So definitely some big higher grade areas within this. And this deposit is effectively from surface. And this is part of the real interesting part of this region, much like the picture that I showed before. We have between 20 and 40 meters of cover, unconsolidated cover that sits over the top of the deposit, which is effectively hiding it. And as one of the folks from Tech said here this week, he said, "Cover's your friend," because effectively this has masked this deposit and some of the other deposits or projects that we've been working on over the last 12 months. Most parts of the world, if rock sticks out of the ground, someone in the last 100 years has gone up and chipped off a piece of rock and assayed it and gone back and figured out if there's copper. But here we're dealing with cover, and with modern techniques, we can actually, look through and find these things. And this just kind of shows it again, that kind of high grade corridor where you've got, 100, 200, 250 meter intervals of north of 1% copper equivalent going through the deposit. So really over, the last 18 to 24 months, we've got into the country, we've set up, we've got a great team of local geologists. We've got 2 expat geologists on the team. We've applied for licenses. We've got licenses. We've run more than 100,000 line kilometers of magnetics over the region, and this is actually helping us to light up targets. And then last year was really our first field program, and we had out in the field doing soils predominantly in the southern licenses where we get more outcrop and subcrop. We did 16,000 soil samples and are now following up with that now. So this is our broader land package. As you can see, it's significant, more than 3,000 square kilometers. So it's a lot of dirt. We visited a bit of it again last week when Oscar was out. But I'm just going to take a couple of these projects and hone in and talk a little bit about it. You can see we're based in Ekibastuz here. It's about an hour out to the Muskoka deposit. But the whole sort of strategy here is to be within driving distance. So you can visit all these, in a day. Of course, one thing to look at here is the Boschkel copper mine. This is Kaz Minerals. It's 1 billion tons of 0.4% copper. That's where I quoted the $1.10 per ton. They are making hundreds of millions of dollars in free cash flow. And we've been able to assemble a land package that actually almost completely surrounds that. There's 3 known porphyries on this belt. One of them is Muskoka that we have. The other 2 are in production, Boschkel and Nurkargan. Of course, over a 500 kilometer, when you take that belt and stretch it out north to south, in areas that, over the last 20, 30, 40 years have had a lot of exploration, you can hide a lot of porphyries. In our case, because there's really been a lack of exploration and the cover, there's only 3, but when you look at Chile, Arizona, Peru, Ecuador, and the Philippines, where I was involved with developing a copper porphyry, it's quite easy to hide 20 or 30 porphyries in a belt of 500 kilometers. We look at the Mesor license. This is a license that we were granted about just over a year ago. I'm going to hone in, and you can see the red area is the license area that we were granted, and it's immediately adjacent to the Boschkel copper mine. This is Kaz Minerals, which of course you'll know in London. It was publicly listed up until a couple of years ago when it went fully private. 60 million tons per annum moved there. It's 30 million tons through the plant. It's just under 0.4% copper, and I think this mine generates about $500 million a year in free cash flow. And so we were able to pick this up. And the interesting thing about this is it was originally discovered through an IP survey. You can see here, this is actually one of the Soviet cover maps, and we're reliant a lot on the Soviet work that's happened over the last 30 to 40 years. In fact, in most of our licenses, there's been really no modern work done on. And so we're having to go back to these Soviet reports, utilizing our young Kazakh and Russian-speaking geologists, requesting reports, getting the reports, requesting more reports, and started to piece things together. But what this looks at is a profile or a contour of cover. And you can see where Boschkel is. It comes to surface effectively. That's a mine today and doing very well. It's got, I think, a 30-year reserve on it. But as you move along the northeast trend onto our ground, you can see 10, 20, 30, that's meters of cover. So you can't see anything, but to us, it looks like the mineral trend, of course, continues on. We've been able to pick up ground to the south as well. The Elemis deposit, just down the road from Ekibastuz, this has had some drilling on it here about 15 years ago. I don't know anywhere in the world where you can actually stake ground where you've got 140 meters of 0.7 gold and 0.42% copper right from surface. We were able to pick this license up. And I think it also kind of demonstrates the transparency in this new system in Kazakhstan. Anything we've applied for, providing that we're the first to apply for it, we get it. It's kind of first in, best dressed. Some of the other holes in the south, 100 meters of 1 gram gold and 0.2% copper. This is a 7-kilometer long trend, lithocap. We visited it again last week. And we've been doing we did quite a bit of soils work in this area and also out to the east last summer. And the boys are actually out in the field right now, again, following up because we do see more subcrop here where the soils seem to be helping us to identify these additional targets. That's just a picture of some of the rocks for the geologists in the room, but pretty common looking porphyry textures from that drilling that was about 15 years ago at Elmas. And then if we look at Akaduk, down in the south, this actually has had pretty good stream of Soviet reports. You can see there quite a bit of mapping and sampling. There's a big lithocap that's been done there as well. That's been mapped out down in this area, but arsenic and bismuth, quite a moly anomaly as well. And when you look at the historic work, there has been some drilling there. You can see 10 to 15 meters of about 1% copper was an assay for gold, of course, and quite a bit of trenching as well. And so this is all the sort of stuff that we're following up on. That's what it looks like. It's a beautiful part of the world. The guys out in the camp really, field camping last year. But just on our licenses alone, you can see some of the historic work that was done by the Soviets. But much of this, as I said, is potentially 30 or 40 years ago. From a CSR perspective, Kazakhstan is committed to net zero 2060. And, as I said, more than 90% of our workforce is Kazakh. But this is one of the things that's really stood out for me from a perspective of having spent most of my career in Southeast Asia, in Latin America, places where we spend a lot of time not necessarily talking or focusing on rocks. And I think because you've got a big country, you've got a small population, and you've got a country and people and a government that accept mining, that want mining. If you go to the National Museum in Astana, there's a whole section on mining. It has been a real sort of breath of fresh air for us. And we're really happy to be in Kazakhstan and growing our business there. So for us, we feel we're kind of a ground floor entry into this new, really exciting jurisdiction with a governance level that has changed dramatically over the last 5 years. One that we recognize the majors are starting to show up now, obviously with Teck as an investor, and we have CAs with about 2/3 of the world's largest copper miners right now. We already have a significant deposit that we're going to keep on growing, but it's this broader land package that's really, driving a lot of interest from many of the majors. The Kazakhstan cost advantage, I think when you take deposits in Kazakhstan, like I say, a 0.4% billion ton porphyry, and if you're to pick that up and to put it into, BC or Australia, I would argue you probably need, quite a bit more grade in order to make that work, particularly when you're buying your diesel at 50 cents a liter in Kazakhstan. And you'll continue to see quite a bit of news flow. We've got a drill turning now. We've had at least one drill turning over the last 18 months, and plenty of news flow coming through. And as I mentioned at the beginning, if you haven't been to Kazakhstan in the last 5 years, you haven't been to Kazakhstan. That's what the capital city looks like. And there's more cranes there. I think, as Robert Friedland used to say, that the national bird here is the crane. So thank you.
Thanks very much, Darren. I think we've only really got time for 1 or 2 questions. So yeah, Matt.
Yeah, hi Darren, and I just disclose I'm a shareholder. You mentioned CAs with majors. Would you look to sort of dilute the project, or would you prefer them to come in at the top level like Teck did?
Yeah, so yeah, good question. So really, we wanted a bit of time to try and figure out what animals were on the farm before we necessarily started talking about other sort of structures. But we are having some discussions here over the last call it 8 weeks or so, because we've got such a big land package, to maybe bring a partner or two in on some of these licenses. There's been a lot of interest, there's no doubt. And I think particularly because of the speed at which we've been able to get into the country and get these licenses in this very prospective area. So it'll probably be a hybrid approach. There'll be some that we'll be focusing on and investing in, and then others where, if we can bring in a major to perhaps bring a bigger balance sheet and spend, $5, $10, $15, $20 million over the next few years, that would be kind of part of our strategy.
Thanks. Any last questions in the room?
What are the holding costs with $3,300?
Yeah, good question. So each license, the licenses, the maximum size that you can pull together is about 460 square kilometers. It costs about $120,000 a year of exploration work for us. That scales up. So 120, 150, kind of $180,000 in that range over the next few years. The licenses you get for 6 years, and then you can renew them again for another 5. And then the license cost on a per annum basis is about $20,000. Yeah, so it's relatively modest, but equally, they're with this move now to this new format. For 25 years, a lot of these licenses sat there and had no work done on them, right? And so this is why they've kind of gone to this Western Australian, the use it or lose it, and these licenses are then coming back into the cadastre, and then you can apply for them.
Perfect. Thank you very much, Darren. Very, very good presentation. We're going to move on to the last presentation on the line. Just bear with us a second. So yeah, we should have Jamie Beck from Philo Mining waiting on the line. Is the line unmuted, John? Okay. Jamie, do you want to go ahead?
Sure. Thanks, Roger. You guys can flip to the next slide, I guess. Okay, pleasure to be here, everyone, and thanks, Hannam and partners, for hosting the next round of Future Copper Giants. I'm Jamie Beck, President and CEO of Philo Mining. We can move to the next slide. This presentation does have some forward-looking statements, so encourage everyone to read through the cautionary language. So Philo Mining, a little bit about us. in terms of capital structure, this is a part of the Lundin group of companies. What does that mean? It's really that the Lundin family is our largest shareholder. So they hold about 32% of the shares outstanding. We also welcomed BHP onto the register just over a year ago. They did a 5% equity interest in the company for $100 million at that time. So that's sort of a look at the shareholder register. We actually just announced the closing of a financing. So we refilled the treasury. We raised $130 million in an upsized deal announced last week. So that sets us up really well for our exploration plans really over the next little while. We trade in Toronto on the TSX, as well as in Sweden on the NASDAQ First North, and current market cap just sort of shy of 2.7 billion Canadian. On to the next slide. Just to get your bearings here. So our project, Filo del Sol, it's 100% owned by Filo Mining. It's our only asset, and it sits on the border between Chile and Argentina. It's really an Argentine-centric project. So most of the work that we're undertaking at the moment is based in San Juan, Argentina. And Filo is part of a broader, new, emerging copper district, largely controlled by the various Lundin entities. So you can see on the map there, Filo del Sol are arguably going to be the crown jewel here, but to our east is the Jose Maria deposit, 12 kilometers away. That's owned by Lundin Mining. To the north is Los Alados, which is also about 15 kilometers away. That's held by NGX Minerals, another Lundin Group exploration company. And then beyond that, in more recent news, is the Caserones operation. Lundin Mining recently purchased a majority ownership and operatorship there. They're going to now hold 51% of that Caserones operation in Chile. So that's an existing large-scale copper mining operation with significant infrastructure in place already. Power lines, tailings facilities, access to water, and all the bits and pieces that go along with a big copper project. So starting to build a new copper district in the Andes. Next slide. So, really high level on Filo, I think what you've got here is size, scale, grade, and scarcity. And you've heard from probably a whole slew of projects today. I think what's so exciting in our industry at the moment is that investors don't necessarily have to really choose between all of these great projects. The reality is that the world needs more copper, and we're going to need them all somehow or another. What's interesting about Filo is options. So what sits on top of the project is an oxide cap. We put a pre-feasibility study around that project, refreshed the numbers earlier this year. And that's a really economic project, open pit, low cost, and effectively acts as the pre-strip to getting into what's really been exciting at Filo. So the option there is to many of these big Andean porphyry projects, you're faced with a big significant upfront capital cost. Filo gives you the opportunity to start a little bit smaller and then work into something much bigger. And what is that something much bigger? It's been a couple of years of just outstanding drilling results. We've now extended continuous mineralization over about a 5-kilometer strike north-south, about 1 kilometer east-west, and at least 1.5 kilometers deep. In addition to that size and the overall scale, there's been some incredibly exciting high-grade discoveries, which we've now tagged with multiple holes, originally discovered in May 2021 through hole 41, which intersected an area we now call Brecha 41. And that was 163 meters of greater than 5.5% copper equivalent, all within a mineralized intersection of over 1 kilometer. So we've got size, we've got scale, we've got grade, and these projects are scarce. Currently, there's 9 drill rigs on site. We've got a 40,000 meter program planned for 2023, well into that at the moment, and should be pretty exciting in terms of continuous news flow on the exploration front for the remainder of the year. Next slide, please. Just a couple of highlights of some of our results. What you're seeing, you know, here is a mix of the copper, but also the precious metals aspect of the deposit. You know, through this area that's in blue shading is a zone we call Aurora, and Aurora is really nothing more than us drawing a bit of a shell, a grade shell around what we think sits at about 0.8% copper equivalent or greater. But within that, you know, hole 55A, that was one that hit 64 meters of 1.2 kilos of silver, one of the best silver drill intersections on the planet in the past decade. Hole 57 was an exciting one. That's one we lost at the end of last season, and the last 11 meters of that hole was into 17.6% copper equivalent. So it just sort of gives you a sense of the flavor of the types of grades, the lengths, and the mineralization that we're intersecting here. On to the next slide. So I'll spend a bit of time here. This is really, you know, the whole story in one picture. This is a long section through our deposit. What you see here is the Aurora zone that I mentioned, and the very high grade area that we intersected a few years ago. Breccia 41 is shown in this red blob that we call BX 41, or we're showing that there. This season's objectives are largely trying to get a sense of just the size of the mineralized envelope. So we know we have something that's special. You can see the PFS resource, and that's the oxide cap. That's the open pit shell that formed the sort of the starter pit before you'd get down deeper. But we still really don't have a good handle on how big is it, where are the extents of the mineralized envelope, and even within that, what is the variation of different grades through the zones that we have. So our focus this year has been a little bit on some bigger step outs. We've put our first holes into a target to the south called Flamenco. We've put our first holes into a target almost 7.5 kilometers to the north called Gemelos. Those haven't been particularly well mineralized, but they are quite altered and remind us of some of the early holes that we put into Filo 20 plus years ago. It takes a while to hone in on the actual geologic target there. So you've got surface sampling, you've got geophysics, you've got all the tools that the geologists use to try and, you know, guide where the best grades are, but nothing beats actually getting drills into the ground and then using that information to move around and figure out where you want to go next. So Flamenco and Gemelos are going to be great guides to try and figure out where we want to place our next holes. Probably more importantly, over the next few months is a new discovery in the Bonita zone that sits 1.5 kilometers to the north of Aurora. And what you're seeing here is all the drill holes projected onto one plane. Of course, there's quite a bit of distance, you know, in and out of this page in the east-west dimension. And so there's really quite a big gap between where Aurora ends at our most northerly hole and new success at Bonita through a couple of drill holes. So that's going to be a bit of a focus of our work moving forward, is trying to understand if we can continue that Aurora zone 1 kilometer or 1.5 kilometers to the north. To put size and scale in perspective, each one of these blocks is 1 kilometer squared. So if you imagine another dimension, you know, in and out of the page, call one of those blocks 1 kilometer cubed. Given our sort of rock density, that has the potential to host approximately 3 billion tons of material. So if we can start stacking a few of these kilometers cubed of potential mineralized material, Filo will quickly grow into one of the largest copper projects in the world. So on to the next slide. This really guides what our objectives are. You know, I mentioned we're doing some of those big step outs to the north and south, testing Flamenco and Gemelos. That was summer drilling. Of course, we're now moving into the Austral winter, and the focus will shift more into the blue and the green areas, testing the variation in grade that we see in and around Aurora as we tighten up the drill spacing there, and then trying to understand that Aurora to Bonita gap in the green area. And if you flip to the next slide, you'll get a sense of why we're excited about that. This is a geophysics. So this is MT. which is testing conductivity. This is a slice that you're looking at that drapes topography, so it follows the surface at about 600 meters below. And this is hot off the press. We just finished this work this season and interpreting the results. What we see is really good correlation between the geophysics here and our geochemistry and the drilling that we've completed through the Filo deposit, as well as the Aurora zone, and an area that continues to extend between Aurora to Bonita that's completely undrilled, and in fact is arguably the most conductive signature that we see here. So it's pretty exciting to think that our original, I guess, views around Bonita was that it might have been a separate sort of mineralizing event, a separate porphyry center. I think that's changing a little bit now, that this perhaps is more continuous as it trends to the northeast, and so we'll start setting up drills into that gap as we look towards advancing our Austral winter drill program. Next slide. So that's currently the plan. 9 drills on site, 40,000 meters planned through 2023. We'll continue to build out our geological model. We're advancing all of the metallurgical test work, environmental baseline, glaciology studies, all the bits and pieces that come along with this. I think the other sort of interesting lever here is more broadly the Vicuña district, and I've got a slide on that in a couple down, so I'll speak to that next. But if we flip to the next slide, I think it's important to recognize that we benefit, I think, at Filo from a bench strength in terms of our ESG performance that probably swings a little bit above the capabilities of junior miners in general, and that's really in large part due to the Lundin Foundation. They've supported our project. They've helped guide our responsible mineral development policies. We're now aligned with the UN Sustainable Development Goals. We've identified 4 key priorities for Filo del Sol and have developed goals, work programs, and action items to try and tackle those. So it's been a real privilege, I think, to have the input of that Lundin Foundation to help guide what's really world-class ESG practices. On to the next slide, and sort of finally about the Vicuña district. What are we talking about here? It's the possibility to develop, I think, what could become the next great big mining camp in the world. There's now 3 known discoveries, multiple additional prospects. In particular, you'll see a big alteration zone that sort of clips the northern part of our boundary and extends into the NGX Minerals Los Alados ground. That's a target we call Potro Cliffs, and Los Alados put their first drill hole into that, announced a few weeks ago that hit a significant intersection over 7.5% copper equivalent. So lots more to still be discovered. I think this is the kind of zone that has the potential to be producing copper and mining copper for 100+ years. And that's what's gotten the likes of Lundin Mining interested, and in our case, BHP. So what we see here is the potential for a district scale development, hub and spoke style, where you've got central processing and maybe a bunch of different satellite ore bodies feeding that central mill. To share on infrastructure costs, drive costs down, and hopefully create a new copper mining district for a really long time. So with that, Roger, I'll turn it over and see whether or not there's any questions. You guys can flip to the last slide.
Thanks very much, Jamie. Any questions for Filo in the room? Okay, got one from Matt.
Yeah, hi Jamie, it's Matt. Just a quick question on, obviously you're right on the border there, and if this is going to be a next mining district, how do you see the sort of border playing on that?
It adds a fun little twist to everything, doesn't it? We're part of what's called the Mining Integration and Complementation Treaty. It's a mouthful. I call it the Binational Protocol, and really what it is an agreement that exists between Chile and Argentina to facilitate cross-border projects like this moving forward. In its simplest form, they got together and said, listen, if we don't find a way to work together, then neither of us are going to benefit from the potential economic gains here. So from an exploration perspective, it's fantastic. I can use Chilean drillers in Argentina. I can use Argentine water in Chile. I can, pick fuel supply from either side of the border, whoever gives me a better price. So from an exploration side of things, it's awesome because we get to sort of pick and choose the best of both. As you move towards exploitation, clearly, it adds a little wrinkle here, but effectively what you do is you draw an area of influence around the mine, very similar to what you would do anywhere in the world. And in our case, that area of influence just happens to impact both Chile and Argentina. So you do your environmental flora and fauna, your hydrogeological studies in both countries, but it's collecting effectively the same data in the same area, and then you put forward environmental assessment reports as you look towards permitting. So you permit in both countries. And then when it comes to splitting up taxes and royalties, it's quite simple. If a block of ore sits in Chile, you've got it coded in your block model, you pay taxes and royalties to Chile. If the block comes from Argentina, you pay taxes and royalties in Argentina. So that's in theory how it works. At the end of the day, our pre-feasibility study, for example, is a good proxy. With 10% of the deposit sits in Chile and 90% of that deposit sits in Argentina. All of the deep drilling, all of Aurora, all of Bonita is entirely in Argentina. So if that sort of cross-border nature of the project ever really reared its head and threw up a red flag or limited us from moving it forward, I think we also have an opportunity here to rescope this as a single jurisdiction project.
Thanks. Any more questions in the room? Okay, I'll just sort of one last question from me. Just I was interested in your last drilling update that you have one rig focused on geotechnical drilling around an underground exploration at it. So, what's the thinking around that? Are you going to be doing underground drilling ultimately? And I guess as an add-on to that, so how much longer do you expect to be drilling this, given the sheer size of it?
Yeah, maybe flip back, I think probably about 3 slides to the plan map. That one there. Perfect. So just around where you see the Filo Mining logo in the plan map here, that's, call it 1,000 meters of relief down from the top of the ridge. So the plan would be to develop a portal location there, move our way towards the west as we move towards Filo del Sol, and then dogleg into a drilling exploration at it that runs about 1.5 kilometers north-south, specifically, Roger, and around that Brecha 41 zone. And largely that's a result of our geologists and wanting to think about a future potential mineral resource estimate and what kind of drill spacing we'd need to upgrade in confidence the 6, 7, 8% copper stuff, that has the potential to contain a significant amount of metal in a very small volume. So despite, our 200 meter plus drill spacing that we're targeting on surface, we probably want to tighten that up. And that's really the function of what we're thinking about with that exploration at it. We could also use it for bulk met sampling. So we're really at this stage, we haven't made a decision to move that forward, but we're gathering the information to assist that decision. So we're doing some geotech drilling, we're piecing together some engineering work, putting some cost estimates, and we'll likely move ahead with trying to permit that. But it's Roger, let's call it a bit of a longer term strategy in terms of what we want to do moving forward. Just generally, where does the drilling stop? Great question. I think that's probably the single most challenging thing that we struggle with as a board and management. It's okay. We know it's big. We know it's got size, scale, and grade. Eventually, our investor community are going to say, fair, let's stop with the drilling and show me how you're going to get to cash flow. But I think what we see at the moment is really significant opportunity to surface value with that drill bit, and we're still getting rewarded in the market for drilling success. So we'll let the market guide a little bit here. I think once we've got a sense of where the goalposts are, that's probably time, we're not going to need to drill off this over 8.5 kilometers to indicated inferred. For example, we can start smaller and then build it out over time, but still see really significant opportunity to surface value with the drill bit on some of these step outs. So we'll advance that work at least in the next 12 to 18 months.
Thanks, Jamie. And yeah, so that brings us to the end of the afternoon. As I can see, some people are feeling quite thirsty in the room. I think we do have some more refreshments here in the venue until 5 o'clock, and then we've got an area at the pub around the corner called the Jackalope, which is just left and left again for anyone who wants to join us. But yeah, we're super excited about the copper space, as you can tell. We think all of these projects have great prospects and are required ultimately in the sort of world we're in. And yeah, just continue to watch this space. Thank you very much.